From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 5th, 2016. There were no trades yesterday due to the bank holiday, so we'll get right into our analysis for the day today. Today we're going to be looking at the EURUSD, the euro versus the US dollar. Getting started here on the daily time frame, we can see over the long haul, we're going all the way back to November, December of last year, and really since the beginning of this year, we've seen a primarily upward trend to this currency pair. You can see the red trend line here as the market rose along that trend line. Sure, there were downward slides within that uptrend, but for the most part, it was an upward trend for most of the year. Now we've seen a little bit of a change in behavior, and we've seen the market push underneath that red trend line. Since it's moved underneath that trend line, since we saw it fall off after the Brexit news a couple of weeks ago now, we're looking for rallies into resistance for opportunities to get into that bearish momentum that began after that referendum. So what we're looking for are sells on rallies into resistance. We can also see that the currency pair is sitting underneath this red trend line, which gives us again another clue and the potential for resistance as the market rallies into those areas of resistance. We've seen this pink shaded area here right around the 1.1200, 1.1180 level hold as resistance before. We go back in time just where the red circle is. There's one example of where the pink shaded area held underneath the 1200 level as resistance. So we take that as a clue that this is a decision point in the market. Let's go ahead and zoom it in one time here. You can see that red circle. There also was support just after the right of that red circle around the pink shaded area. You see some resistance right here. And so we know, again, underneath 1200, as long as the market has stayed underneath there historically and even above it, we see that the market could find a decision point, a sell or buy area. So since it's underneath it, we're looking at resistance into or just underneath 1200, the pink shaded area. The risk in this scenario, of course, is that the market changes and it pushes right back above there. If we're looking on sells on rallies into resistance, we look for other evidence of resistance as well. Taking Fibonacci from the high just before the Brexit news, the high at the Brexit candle there, the big red candle, down to the low puts the 50% retracement level sitting at 111.7580 level as well. So that's good news for us looking at this area as resistance. Let's go ahead and take it down to the 4-hour time frame, and we can see already, even today, just a few hours ago, the market tapped into the 111.80 level, and there was this influx of sell orders. You can see on the previous 4-hour candle, touched the pink zone and then rapidly reversed. So there's an influx of sell orders sitting there right around that pink shaded area. So we know that that becomes a decision point that the market has already recognized today. And as long as it stays underneath there, that's the same thing I'll be looking for all day long today. Resistance into the pink zone, 111.80 up to 112, and the potential fall back down towards the green zone down here. Now we have seen a little bit of a rising trend since the Brexit news, and I would put a red trend line somewhat like this. We've seen a little bit of a rising trend pattern, so what we'd like to see is that pattern change. So the next thing we're looking for would be the breakdown of our support in the green shaded area here. That's it, that sits just underneath the current market price. So if we're looking for a low risk and high reward decision point, if we're looking to go short and sell this currency pair because of the previous Brexit news and the fact that we're under resistance, we want to get as close as possible to 111.80 because then our risk becomes smaller. If our risk is, the fact is it could break back above the pink zone, if our stop loss is above there, the closer it gets, the smaller that risk or stop loss needs to be, and our higher our potential profit target can get back down to the green zone or lower. Now on the other side, if it doesn't touch the pink zone again or doesn't go up before it goes down, the next thing we'd look for would be the break of this rising red trend line in the green shaded area. That would give us a clue that the pattern is shifting back to the bear side here for the euro dollar. So I'm looking for opportunities to go short. Just to kind of boil this down, into the pink shaded area would be ideal. Selling at a higher point is always a better idea, lower risk and higher reward. Or the next thing we're looking for is the breakdown of the green zone. If you're looking to go long on this currency pair for whatever reason, then you want it to be as close as possible to the green zone. You need it to dip back down to 111.20, 11100 before you would even consider going long. So one of two things is going to happen today. It either rallies back to the pink zone and we sell it, breaks through the green zone and we sell it, or for those folks looking to buy the rising pressure that we've seen since the Brexit news, you're looking for it to dip back down to the green zone before that becomes an opportunity for you on the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.